Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it's a brand new week and a good one at that. You're hoping it will be a good one given the fact that we have come off a very strong week. Over the last 5 sessions or so, we've seen the Nifty rally as much as 1,000 points, so 23,350, that's where we are at. And the Sensex as well saw a good up move, 4% up move, so to say, in the last week. 5 straight sessions of gains, that's the first in the last 7 months for the headline indices. For the broader end of the markets as well, a solid week. We saw gains of somewhere around 8 to 9% on the mid and small cap indices. That's the first weekly kind of gain in the last 5 years. So yes, a very strong recovery after a fair bit of drubbing. Yes, we have come off quite a bit from the highs. In fact, the Nifty is still 11% away from all-time highs, but no complaints because we have seen a very solid recovery coming in. Whether or not it has the legs to sustain, that's the key question. GIFT Nifty hinting at a strong start again, and of course, don't forget we have the April 2 tariff deadline looming. If we manage to sustain these gains past that, then perhaps this is the start of a another leg of bull run, so to say. But of course, we'll ask our experts what they feel about it. But for today, lots to talk about, lots of stocks in focus. Of course, IndusInd Bank continues to be in news. You have M&M as well, that will be in the limelight, and DLF as well, given the fact that Realty Pack saw a very good rally last week. Whether or not it will build on that or not, that's something we'll be watching out for. So DLF from the Realty Pack will be in focus. All your stock related queries will also be in focus, so keep them coming in on a live feed. We'll try and take them up with our experts on the show. But of course, before we move any further, let's take a look at the headlines at this hour. Well, Wall Street X out gains on Friday with the S&P 500 snapping out of a 4-week losing streak. This after US President Donald Trump said there would be some flexibility with tariffs but maintained the April 2 deadline for reciprocal tariffs. Well, Asian markets open higher even as reciprocal tariffs deadline nears. The GIFT Nifty is indicating a gap up start for our market. Oil records a second consecutive weekly gain as fresh US sanctions on Iran and the latest output plan from OPEC Plus raised expectations of tighter supply. Brent trades at $72 a barrel while gold prices ease on stronger dollar and profit taking amid lingering geopolitical and economic uncertainties. And SEBI is set to hold its first board meeting under the new chairman Tuhin Kanta Pandey later today. The press conference would follow at 5 p.m. where the chairman would be addressing the media. Now, reports suggest that conflict of interest disclosures and settlement scheme for algo brokers is on the agenda. Well then, just taking you through the cues for trade today. Of course, we did cross that 23,400 mark in intraday trade on Friday for the first time in 2 months. In fact, the mid-cap index also, rose nearly 8%, clocking its biggest weekly gain since April 2020. When it comes to the small cap index, it surged nearly 9%. That was the biggest gain it saw, monthly gain rather, it saw since June 2020. If you look at the indices and how they have bounced from their all-time, in fact not all-time lows, from the recent lows, Nifty is up somewhere around 6.5% from its recent lows. The Nifty Bank index is also up somewhere around 6% or so from its recent lows. The mid and small cap indices have also recovered as much as 10 to 13% from their recent lows, but they are still they still have a lot of ground to cover when it comes to their all-time highs. The Nifty, for instance, is 11% of its all-time high despite the kind of up move that we saw last week. India VIX, that deserves mention because it has dropped to a fresh 5.5-month low. Some of the sectors that saw big moves last week was the entire PSU basket. So the CPSE index was up somewhere around 7% or thereabouts for the week, and even the Realty Pack was up somewhere around 7.5%. Capital market plays and auto stocks also saw a strong up move. Even the OMC basket saw a good up move despite a resurgence in crude prices. In terms of put call ratio, it fell to 1.15 against 1.16 in the previous session. Looking at the stocks in the F&O band today, Hindustan Copper, IndusInd Bank and Polycab. These are some of the stocks that will continue to be in the F&O ban list for today. Out of F&O ban, Manappuram has exited once again, and so has SAIL. talk about fund flows. You might look at the FII net buy figures and see that, okay, fine, it's a 7,500 crore worth of buying that has come in the cash market. But of course, that's a bit skewed because don't forget, it was the FTSE index rejig, so most of it was passive flows. But even then, it was I think third straight day of FII buying coming in, and the FII sell-off that we have been witnessing for a few months now has kind of slowed down, and the market will take heart from that as well. The DII net sell figure stood at 3,200 crore rupees. For the last week, if you look at the FII net buy figure, it stands at 5,800 crore rupees or thereabouts in the cash market. Even in the futures market, there has been some bit of short covering when it comes to the FIIs. And I just want to take you through what we can expect in terms of the tariff deadline that is looming in on the 2nd of April. The recent comments coming in from Trump have suggested that tariffs will be more blunt than precise. In fact, headlines also suggest that tariffs may be more targeted than previously expected. Some countries may be in fact excluded from widespread reciprocal tariffs, but I don't know whether India will feature on that list or not, because Trump has been calling out India for imposing high tariffs on US goods. So yes, 2nd April deadline, that will be the next key thing to watch out for, and that perhaps could be a risk to the rally that we have seen in the equity markets in recent times. But on that note, let me bring on board our guest for today. Joining me is Ruchit Jain, VP Technical Research at Motilal Oswal Financial Services. Ruchit, great to have you on the show. We've seen a very, very good rally come in, after months of sell-off, so to say, and a lot of pessimism was there. FIs were selling. There was a lot of fear in the market. But with this leg of up move, do you think some of the fear may be abated now? The Nifty, for instance, is trading above its 20 and 50-day moving averages. 100-day moving average will be in focus as well, right? That level stands at 23,521. Can we make a dash at that level in the next couple of sessions, if not today?
Very good morning, Nandita. Certainly, if you look at last 1 week, I think the two main factors which were worrying for the market since the month of October. One was the dollar index, which had rallied from 100 to 110, and second was FI selling. Now, both these factors have turned now to be in favor of our markets, where the dollar index has cooled off from the highs of 110 to about 104 now. And FIs have, the cash market selling has reduced. In fact, they have turned buyers on a couple of days. And even in the index futures, they have reduced their short positions, which was around 15% to about 31, 32% now. So I think this clearly marks a positive sign. So after forming a bottom around this 22,000 mark, the price up move has also been supported by broader market participation. So I think this should continue. And on the higher side, we are watching out levels around 23,600, which is the 38.2% retracement of the entire correction, which of 4,000 points, which we have seen from the high of 26,000. So I think 23,600 could be the level where we could see some kind of profit booking or consolidation. But again, now this remains a buy and dip market, where any kind of correction if comes, minor corrections if comes from these resistance levels, they should be used as a buying opportunity. So I think keeping a focus on a stock specific approach and trading with a positive bias should do well in the markets for the near term.
Okay, that's the view. Buy on dip, that's the setup for now as well. But looking at the Nifty Bank Index, we have in fact crossed that 50,500 mark decisively. In fact, if you look at the pre-open, we can see another 400-point bump up on the Nifty Bank Index, inching closer to the 51,000 mark now. You expect more strength now going forward in terms of resistance level? What is the next level to watch out for?
So, Nanda, if you look at this upon, I think a relative outperformance of what can we say the leadership has been taken by the banking and the NBFC space, where all the other indices are recovering from the lows. The Nifty Financial Services and the Nifty Bank Index, these are two indices where a clear high top, high bottom structures have started. So I think we could see continuation of this momentum, especially led by some of the private sector heavyweights and some NBFC stocks. I think the banking and NBFC space as a whole should do well. As far as levels are concerned, I think the index could, in the short to medium term, the index could rally towards 51,500 to 52,000 range, where the December end highs are placed. So I think the Bank Nifty looks more positive. And as I said, that the NBFC space and the private sector banks have shown initial signs of leadership in this leg of uptrend.
Hmm. Okay, that's the view. Bank Nifty, of course, showing leadership. In fact, banking and NBFC names have been showing leadership. But one stock that has been in focus and that has eroded quite a lot of value is IndusInd Bank. The stock made a fresh low of 606. Since then, it has somewhat managed to limp back to somewhere around 700 levels or so. But from these oversold levels, where do you expect this stock to head? And would it be a buy in terms of risk reward? What are your thoughts?
So I think, yes, if one is looking from a bit mid to long term perspective, then I think no, this should do well. Overall, we have seen a good consolidation phase no, happening over last few months, and after this consolidation, if the momentum now continues on the high side, then one can expect about no 8 to 10% returns in the short to medium term.
Okay, that's the view on an IndusInd Bank. But sticking to UCO Bank now, sticking to the banking index, so to say. But we'll come to that. We just have about 10 odd seconds, in fact, for the markets to open. Looks like a strong start. Then, at least the pre-open is hinting at a triple-digit up move on the index, very close to that 23,500 mark in the pre-open. Yes, we are getting the first ticks as we speak. Good 120 point uptick as we speak. 23,475 is where we are at. In fact, we are just about making a run at that 23,500 mark as well. Hopefully we will be clocking that level soon enough. But look at the Sensex, another 400 point uptick, 77,320 is where it's at. The mid cap index outperforming as of now, almost 1% gain coming in there. A 440 point move on the Nifty mid cap index. The bank index as well, 50,900 is where it's at. The advance decline ratio on NSE, early days, but it's almost at 7:1. Breadth has been improving, and today as well, at least at the open, we are seeing good traction, and of course 1,590 advances to 236 decline. So that's a great advance decline ratio as we speak. But in terms of sectors, then let's see what which sector is really taking the lead. Just want to point out the India VIX index has jumped somewhere around 4% or thereabouts, around that 13 level. It was down to a 5.5 month low, but today it has seen a fair bit of uptick. Auto pack 1% gain, energy pack is up almost 2%. You have the infra pack as well doing well, gains in excess of 1%. Aside of that, PSU banking index is doing well, almost 1.5% gain coming in there. Even the realty pack that was among the star performers last week is witnessing almost a 1.5% gain. And of course, needless to mention that all the sectors are trading in the green as we speak. Let's take a look at some of the stocks that are taking the lead at the current juncture. It's L&T. Remember, we saw some big order wins last week for L&T, and the stock has seen good traction today. Top Nifty gainer. Power Grid as well, up 2.5%. In fact, Power Grid is in news because the company has sold equity shares in 20 subsidiaries at 420 crore rupees or thereabouts. So this stock is among top gainers. NTPC, ONGC. So some of these utilities are also doing well. Aside of that, you have Kotak Mahindra Bank. That's among the top gainers. Some bit of news flow there as well in terms of technology officer. So that stock is reacting to that. Coal India, Bharat Electronics, even Reliance Industries lending support to the index as we speak. On the flip side, losers list thankfully is very slim. Titan, Ultratech Cement, Tata Consumer, Infosys, Trent. These are among the top laggards. Even life insurers have come under some bit of profit taking. Remember, last week both SBI Life and HDFC Life had seen gains of somewhere around 9 to 11% apiece. But today there is some bit of profit taking coming in after that stellar rally that came in last week. Ruchit, we are past 23,500 as we speak. It's a 150 point up move. Of course, we did speak about the levels to watch, but for the day, what is your bet in terms of a level on the upside?
Nandita, I think no overall, as we said, that 23,600 is a level that we are watching out for the market to test in this leg of up move. Considering that no, this is the 38.2% retracement level of the entire correction. And what you can see in the opening ticks also that the up move is and the broader markets are doing well. So I think we should see a continuation of this momentum maybe today itself towards 23,550, 23,600 range. And I would come back to IndusInd Bank question. I think no, I misheard that. I think no, the IndusInd Bank before the market open. So I think this stock has been forming that low top, low bottom structure, and what we have seen that a relative underperformance has been seen because of the negative news flows which have been no, in this stock since last few days. So I think until we see any kind of price volume action getting changed or any kind of recovery coming in the stock, I think one should stay away and from doing any kind of bottom fishing here.
Okay, stay away from IndusInd Bank as of now. But one stock from the banking lot itself, IDBI Bank, has been buzzing and how. There's also been some buzz in terms of divestment here. But there is some bit of news flow. RBI has imposed a penalty of 36 lakh under Section 11 of FEMA Act. The penalty is for non-compliance in due diligence in processing and allowing forex transactions. The bank, so to say, didn't carry out due diligence in 363 inward remittances between June 2016 and January 2023. But as I mentioned, the stock has seen quite a strong run-up. I think in the last 5 sessions itself, it has seen a 12% uptick, and today it's extremely flat at this current juncture. But is there a trade here, because it is still almost 20 to 25 rupees away from 52-week highs? Should one ride this momentum for triple digit levels on IDBI Bank?
There's a broad trading range which has been going in the stock since last couple of months, where whenever the stock is coming around that 65 level, we are witnessing fresh buying interest over there. And on the high side, levels around 88, 90 are the immediate hurdles. So I think that it would continue to consolidate within this broad range. But yes, downside seems to be limited from here on, considering that recently it has formed a double bottom kind of pattern around that 66, 67 mark. So any existing positions, I think one should have some patience and continue to hold on for an up move towards 86, 88, and one can take a review again once the stock comes there.
Okay, that's about IDBI Bank. Couple of banking queries on our feed, but I think I'll come to that in just a bit. I want to talk to you about Reliance Industries as well. The stock has, started to do well after a prolonged period of underperformance. Now, there is news flow that the company has acquired 74% stake in Noyan Shipyard for 382 crore rupees. In fact, the stake has been acquired from Welspun Corp. Now, Noyan Shipyard has become a step-down, wholly owned unit of the company, and it plans to use a part of the shipyard land at Dahej to build hydrogen electrolyzers. So that's towards hydrogen push. But looking at the stock, it was up somewhere around 4% or so last week at around 1290 levels. How much more of an upside do you see chartically? Do you think this stock will take the lead going forward in this leg of the rally?
And I just missed the stock name. Which stock it is?
Reliance Industries.
Okay, so I think no. Overall, we have seen some consolidation in Reliance Industries over last few months. But the stock seems to have formed a very strong support base around the recent swing lows. So the downside seems to be very limited from here, but we all know that it's a bit of it's not that high beta name where you can expect significant up moves in very short period of time. But a slow and gradual up move can be expected in Reliance Industries. I think if one is looking from a bit mid to long term perspective, then these are good levels where one can consider for fresh buying and buying for the portfolios, and keep some strategy to buy and dips, that if we get any kind of dips towards 1200 to 1150 range, take that as an opportunity to add more positions.
Okay, that's the view on Reliance Industries. Of course, you must also consult your financial advisor, because we are a Reliance Group company, and all the recommendations on it need to be, of course, checked with your financial advisor as well. We are not making any recommendations here. But talk about a GAIL. This stock is up somewhere around 6% or thereabouts. Of course, there is some bit of news flow here. The PNGRB has received request from Industry Committee for Gas Transmission Tariff Amendment. So there could be a tariff amendment that could be coming. The Industry Committee has provided suggestions or comments on regulations with respect to tariff. PNGRB will be or may amend natural gas pipeline tariff regulations of 2008. The comments have been sought, and the comments have been sought on the changes by the 11th of April. So this tariff amendment news bodes well for some of these companies like GAIL, which is why it is reacting the way it has, a 6% up move on this particular stock. Is it a fresh breakout, Ruchit? We have a query also coming in from Kishore on this particular counter. How should one navigate now after this up move? Is it a good buy?
Think any existing position should be held on. For buying, no one can keep a buy and dip approach where any dips towards 170, 172 should be used as a buying opportunity. Overall, the momentum readings after that oversold zone post the recent correction has given a positive crossover. And even if you look at the volumes of late in the up move, the volumes have been gradually increasing. So initially, one can expect levels around 192 to 195. But yes, it remains a buy and dip strategy. No one can keep for gain.
Okay, that's the view on GAIL. Lots of queries on some of these rail and defense names, which have seen a very good up move after a 50 to 60% correction from highs. One of such stocks is Titagarh Wagons. Mukund Yadav wants to know if it's a good opportunity to buy Titagarh now, because of course today as well we are seeing a 4% rally on shares of Titagarh. In the last 5 sessions, we've seen a 17% up move. Needless to mention that the stock has seen a 60% correction from its all-time highs. It's somewhere around 813, wherein the all-time high, or 52-week high rather, is at 1896. Do you think this renewed momentum that we are seeing in rail stocks, would it warrant a buy, and perhaps looking at riding the momentum now?
So you can see a pullback move, since most of these names have seen very sharp correction in last few months, and the momentum readings are showing some up move from their oversold zone. So one can expect a pullback move towards 860, 850 range in the near term. But within the entire railway space, if one has to choose, then I think IRFC is one stock which technically is looking good, and we can expect some gradual outperformance in this stock. So I would prefer going long on Titagarh Rail also if you have existing positions. These are not the levels where one should look to exit from existing holdings. But fresh buying within this space, if one is looking, then IRFC can be bought at current levels, keeping a stop loss below 119 and expect a slow and gradual up move towards 150 to 154.
Okay, IRFC looking better on the charts. That's the call. The next query then, let's shift focus to the media space. PVR Inox. I think it's again from Mukund Yadav itself, but the stock caught my eye because it has reclaimed levels of 1,000 rupees now. Ruchit, it did see a sizable correction as well. In the last 6 months, it has shaved off 40% or thereabouts, but off late it has seen some buying interest. Is this sustainable chartically?
I think it's just a pullback move because the volumes are not that high. And what we have seen that during the corrective phase also, the stock has shown a significant underperformance. So I think, one can avoid doing any kind of bottom fishing over here until we see any volume-based buying coming in the stock.
Okay, avoid bottom fishing in PVR. Hope that answers your query. The next query is coming in from Pooja Khanna, and she wants to know your thoughts on a Zentech. Just seeing the stock, even this stock is quite active. It has been in the last 1 week or so, 18%. Is it a breakout move? Stock is at 1463 right now.
Not a breakout, but I think the stock certainly has shown a good relative outperformance compared to the other stocks within the sector when most of the IT names have seen some sort of correction of late. But the stock still has a good 200 DMA resistance, which would come around 1560, 1570. So I expect 100, 120 rupees up move from current levels. But considering that the stock has already moved up, the risk reward ratio is not that favorable for fresh buying at these levels.
Not favorable for buying at these levels. Pooja, hope that answers your query. Next query coming in from Rupak Mehta, and he has a query on Bata. This is one stock that hasn't really been able to participate in this leg of the rally. If you look at the last 5-day returns, it's just about 3%. When you already have some of these mid-cap names which have gained somewhere around 20 to 30%. A stock like Bata has gained just about 3%, also a rank underperformer, so to say. But Rupak has a query. He wants to know if it's a good stock to enter at this juncture. Your thoughts?
So I think there is a clearly relative underperformance being seen in the stock. When the markets have done quite well over last 1 week, I know the stock has not shown that kind of outperformance or even market performance, I would say, along with the broader market. So I think doesn't warrant a buy at current levels. I think much better opportunities can be seen for the broader markets in other spaces. As you spoke at the start of the show, also that banking and NBFCs, private banks and NBFCs especially is one space where even I would add to an extent the defense stocks where a clear good price volume action has been seen. And I think those stocks which are taking leadership over last 1 or 2 weeks, I think one should focus on those names rather than looking out for such stocks which are underperforming even after such pullback move in the markets.
Okay, that's the view. You have better options if you compare it with the Bata. So perhaps you could avoid this one and look at some of the stocks in banks and NBFCs. Next query from our regular viewer then, Satya CK wants to know your thoughts on Sterling Tools for a fresh long. This stock saw good traction but didn't really see follow through buying. If you look at today's price action, it's not really participating. It's trading with cuts. But in the last 1 year, if you look at the stock, it has held on to its gains of double-digit 12% or so. For a positional play, is Sterling Tools looking good on the charts, or he wants to know if he should add Sona BLW at current levels? Your thoughts?
Rolling tools doesn't look that positive. The stock in the recent corrections has broken most of its important support levels, and still in the pullback move, we are not witnessed any kind of volume-based buying happening in the stock. So I would tend to avoid this small cap name. In fact, many of the small cap, traders are again getting attracted towards the small cap stocks because of the recent market rally. But no, the leadership, I think, once the market starts its uptrend, comes from the large cap names, followed by mid cap and then the small cap names. So I don't think one should be in a hurry to load no such small cap stocks which are not performing in the market up move. I think similar goes with Sona Comstars as well. Where last 1 or 2 weeks we have seen more of a sideways or a consolidation move rather than any kind of uptrend getting started. So I think 535, 540 remains a resistance for Sona comms, and once that gets surpassed with good volumes, then you can look to enter Sona Comstar. But certain Sterling tools, there are no signs of any kind of bottoms getting formed over here.
All right, that's the view. Hope that answers your query, Satya. But just about time for one more query. Then I would like to take up more, but we don't have that much time. I want to take up this query on the Garden Breach since it saw a 30% rally last week. Today as well, it is seeing some bit of follow on buying. Shweta Naidu wants to know your thoughts on this stock. She in fact bought shares at 2,217. She's making a loss despite the recovery that we've seen in the stock. Wants to know, should she wait or should she exit? Still making a loss here. Would you advise her to stay put or exit?
I think defense space as a whole no does not look much negative from here on. No, because we have seen good volumes again coming in the stock, some positive news flows also coming in the most of the in the defense sector. So I think no, you should not book your losses over there, but at least wait for some more up move to come in no before thinking to exit this time. Maybe around your cross price when it's come, then you can take a review again depending upon how the volume shape up along the up move. Then you can take a decision whether to exit that or not. But not advising, it won't be advisable to book losses over here. And within the entire defense basket, if one is looking for any kind of fresh investments over here, then I think stocks such as HAL, Mazgaon Dock, which are showing a good outperformance, needs to be seen, where the no uptrend could continue over medium term. But as even GRSE, I think hold on your existing positions for some more up move from here.
Okay, hold on to your position. I hope that answers your query. But with that, we've come to the end of the query segment. But Ruchit, before I let you go, recommendations for viewers this morning?
Yeah, so overall, as I said, that the broader markets still look on the positive side only. So Madgaon Dock would be one recommendation where one can look for fresh buying interest as the stock has recently given a breakout from its consolidation with good volumes. So here we expect some move to continue with keeping a stop loss below 2,578. short-term traders can expect no levels on the higher side towards 2770 kind of level. So one can go long on Masgao Dock, and the defense space, as we spoke, is still looking bullish.
All right, those are the recommendations coming in from Ruchit. With that, Ruchit, I would like to thank you for taking out time and joining in this morning. Look forward to more
Thank you, Nandita.
interactions, and I hope this momentum that we are seeing in the market continues here on.
Thank you.
Thanks a lot. Well, with that, quickly take a look at the market. We are holding on to triple-digit gains on the index, near about that 23,500 mark. So yes, nothing to really complain about. The mid-cap index outperforming as of now, almost a % kind of gain coming in there. And remember, these indices are coming off their best weekly gains in 4 and 5 years. So yes, the mood has really become much better than what it was a couple of weeks ago. On that note, let me bring on board the big market voice for the day, Ajay Srivastava, CEO Dimensions Corporate, joining in. Ajay, great to have you on the show, and that too at a time when the sentiment is improving, so to say. We did test that 22,000 mark amid heavy pessimism. FIs were in sell mode and global uncertainty was high. Now with a strong rebound and foreign selling slightly easing, do you see this as the start of a sustainable recovery, or do you think it's just like a recovery or rally in a bear market? What are your thoughts?
Good morning. I think, let me be with the mood of the day is that it is a recovery which is going to take us far, and in this market, we have a little different, a little more cautious view that I think the recovery was good because just like anything happens, market was over pessimistic. Now market is over optimistic in September. It happens in the market. That always happens, so that's clear. But what is changing today, dynamics, of course, is that you saw FI buying 7,000 crores, a large number to come into place. But whether it changes the trajectory of the market based on fundamental, I think the March result is going to prove it. And the number two is the government finances are going to prove it. What we are seeing so far in the reality in the market, physical, is the demand is down. Definitely there is demand compression in the market, whether you look at apparel, whether you look at cars, whether you look at two-wheelers. When we go around the market, the indicators are not looking good at this point of time. Things can change. Only industry looking very robust is the hotel industry, aviation, two industries looking very robust. But leave that aside, two industries. I think the rest of the industry is struggling for traction at this point of time. So yes, it's a good relief. It's a good recovery for people. But the fact remains that we got a long way to go. Yes, in the long term, markets will go up, just like we'll all age and die in the long term. So therefore, markets will go up in the long time. Now, whether they go up long time in the time you require them to go up is the key question.
Yes, of course, you did mention some of the factors that are still or that could still be a risk factor. We'll talk about the global part in a bit. But, domestically, investor confidence, especially among those post-COVID, investors who've only seen a one-way move in the market, has been shaken. SIP stoppage ratio is at a high. Equity mutual fund inflows have slowed. How significant is this in shaping market sentiment going forward, at least for the short term? Do you think this will continue for some more time?
I think there will be profit taking. I think people who lost out the opportunity to book profits in the mutual fund will book profit at this point of time. Whenever the recovery happens, and that's going to be the key element of this recovery is going to be, there'll be Indians selling this time to book the profits. If they're sitting on losses, they'll try to get out of it. If they're got profit, they'll book. So I think we'll see a very reverse psychology happening here today that even if I start to buy vigorously, in the next 300, 400 points, if the index goes up, you will see substantial amount of selling coming through post March 31st. March 31st is a tax issue, so nobody can do anything except book losses and reduce the tax liability. But people who got profits are unlikely to book the profit by March 31st. Come April 1st, the tax dynamics will change for the retail industry market because then you got a whole year to worry about the tax and liability, etc. So I think we will see definitely at every big rally, we will see selling in the market. There is no doubt about it. Leave aside the macro. I think the important element is going to be a very domestic economy of India. You saw the Indian exports have fallen dramatically at this point of time. Well, it goes into the employment. If the tariff barriers come down, it's going to affect us a lot, particularly the auto industry. You've seen how BYD has changed the economics and dynamics of the electric car industry. Suddenly, there's no company in India which is at peace today thanks to what's happened to the electric car tariff reduction at this point of time. So I think we are in a very dynamic stage. Capital market stocks, I think we'll see stability. They've seen a good run up in the 2-3 years, whether it is the asset management companies, whether it was the stock exchanges. I think we saw very good run up, phenomenal run up. In fact, BSC's run up was almost 5 times in the last 2 years or so. So there is a pause to this one. But look at the brighter side. And I think that look at the brighter side is people who are not invested coming into the market today come at a healthy level at this point of time. So don't worry about, I think, the key takeaway from this whole thing to everybody is don't have FOMO ever in this market. Market gives you a chance to get in, relax, chill, book your profits, enjoy your life is the most mantra. Put everything in paper money. It shows it's paper money at the end of the day.
Right, we all want to sit and chill and relax, but the April 2 deadline on reciprocal tariff is looming large, right? What are the potential implications of Trump's stance on export-oriented sectors? Of course, you mentioned autos, pharma, how does one really navigate?
I think one has to wait to see that what happens to the autos, because auto ancillary exports are a large component of all our auto ancillary companies. I think there could be a lot of companies could get impacted. The second companies could be engineering exports. I think that could get impacted. And the third large, of course, is pharma. Now, one doesn't know where the pharma ends up, but the fact remains that our pharma companies almost get 60% of the revenues from America at this point of time. So small tariff or whatever comes in is going to eat into the margins. I can promise you, we know the industry quite well. They will not be able to increase the prices of 90% of products they export. I can guarantee that much. And therefore, you will see a contraction in the margins in pharma if the tariff comes through. Now, as you all said, Donald can throw a surprise at us by exempting pharma. But if pharma is part of the deal, I think it's going to affect a significant part of our large economy of pharma, chemicals, APIs, etc. at this point in time. I keep saying, market is not running away from you. April 2 is around the corner. Just wait it out. You may lose 3-4% up and down on the share price, but it's always prudent to see that where the whole impact is, follow and then do it. No hurry to buy auto ancillaries, no hurry to buy engineering stocks, no hurry to buy pharma stocks. You'll get time to buy. So let's wait it out, see where it goes, and enjoy what has happened to existing portfolio. It was in the dumps 3 weeks back. It's looking robust and nice and rosy right now. So enjoy that part of it. Don't worry about what more you can make in this market. This market needs to have stable heads, and rather than having an aggressive approach to the market, saying, "Oh, its second run up has started. Let's go put all the money in." No, that's not this market.
Sure, it'll pay to have some patience at this juncture. But let's talk about earnings as well. Third quarter earnings were lackluster. FY26, are there any great expectations there, or do you expect it to mirror what happened in FY25? Should investors really brace for further disappointments when it comes to earnings?
As I said, consumer sector, definitely. I think that sector is going to get impacted. You will see worse earnings than before. I'm quite sure about it, because the market is just not moving at this point of time. Whether you talk of as I said, apparel industry, whether you talk of the two-wheelers, whether you talk of cars, doesn't matter what it is. Maybe keep aside a consumer durable like air conditioner or fridge, because whatever is happening to the the heat situation in India. But leave aside 2-3 products. Rest everywhere. Two things are happening. Competitive intensity has gone up tremendously. You see every product line. There's 7, 10, 20 players in the market. New ones are coming. You saw what happened to the cable industry just now. In just less than 3 months, 2 new entrants and a capital market exposure is devastated. So India is seeing one of the highest cap intensity of competition to pick up any segment of the consumer market. And it is starting to show, and that includes the banks as well. Heavy competitive intensity. What is not competitive intensity is like power sector. Our infrastructure companies, some of them are good to go with at this point of time. Commodities. Now you can't increase the commodities company. That universe has remained static for the last decade or so in India. So I think if you look at commodities, hotels, and if you look at these select sectors like aviation, there the intensity is much less, and I think you will have greater comfort. Rest of the consumer space, I think, is going to be a bloodbath in the next 3 years to come. And new entrants, new players, e-commerce, you name it. You sit in across and review the sector and says, my God, this CEO must not be having a good night any night.
Right, of course, there is intense competition. Look at cables and wires that you mentioned, and we've seen a sizable correction in the likes of Polycab, KEA Industries, and what have you. But what about defense? I think last time we spoke, you mentioned that, you can't really ignore defense. And these stocks have seen renewed buying interest as well after sizable correction. There's still some ground to cover from, if you talk about their all-time highs. But given the recent orders, 54,000 crore rupee worth of defense orders, and even the, Europe push when it comes to defense, so that bodes well for Indian defense companies. Do you think it's time to ride the wave? Because if you compare it with their all-time highs, they are still, trading at better valuations. Would you say that?
Of course, they're trading at better valuation. Of course, they're good companies, by and large, decent companies. I will not say good companies, but just remember, most of them are PSU companies. Now, that's what gives you down that, listen, can these companies deliver return? It's nice to say 50,000 crore order. Look at the HAL is now very public, right? Even the Indian Air Force Vice Admiral Chair Marshal is saying, guys, give me the planes. You have got orders, but you can't deliver. Now, can I ask you a question, honest question? If any of the PSUs were to make a car for you, would you buy the car? And that explains the conundrum of defense. Can these companies be dependent on to produce quality product consistently on time? That's not PSU mantra has been, and that's not. So these are good companies. You can ride the wave, but you got to get off the wave. It's like surfing. If you don't get off, you're going to drown at the end of the day, and then you can't be alive. So I think these are trading opportunities. They're not bad companies. They're monopoly companies at the end of the day. Nobody else can make planes in this country at this point of time. Only HL can do it. But they do it one plane, if I'm not wrong, in 4 months or something like that, or 5 months. Now, that's not going to give you a return. So, yes, you can't ignore the sector. But the pain and peril is this PSU. And I think, it just bothers me to no hell that this government came on the premise of privatization of PSU. Why have we stopped it? Look at the valuation of PSU today, abysmal valuation. It's just, we bought. It's not we don't have in the portfolio. We have in our portfolio. The dividend yield is astronomical. The EBITDA ratios are decent. But look at the PE ratios. They're in single digits in this world. It's just incredible story out there in terms of valuation. Now, will they turn around and give it to double or treble the money? They can. They can do it certainly because they're such low valuations. But you got to take the risk with it, that with the risk of PSU comes performance, and with the performance comes your shareholder returns. So ride and dive is the word here. You ride up, you get out, watch the tide come in and go out, and then you jump in again. But consistent return from them, very difficult to assume that they will give you consistent return. If you can't produce planes, how do you give shareholder returns?
So, a good chat, but, what are the couple of sectors that you would recommend which are tariff proof and, which don't have that threat of intense competition and which are like a portfolio must have right now, according to you?
See, what we have done is, like, hotel is a good part of our portfolio at this point of time, a very large part of our portfolio. Hospitals is significant part of the portfolio. We have all legacy capital market investments and stock exchanges and asset management companies which are doing the servicing of asset management companies. That's in our portfolio because that's not tariff related issues. So these three sectors are a large one. Certain critical engineering export companies are there in our portfolio, which are really strategic export companies are in our portfolio at this point of time, and commodity companies, a large component of that. And of course, everybody has metals, so, whether precious or otherwise, so that goes without saying. So commodity, metals, hotel, aviation, I think hospitals is what sums up what we are into at this point of time.
All right, that's the word then. Ajay, always a pleasure chatting.
You didn't answer the question. Will you buy a car from a PSU? You didn't answer the question.
I don't. I think we'll have this chat offline, Ajay.
Okay, bye.
We'll have this chat offline. Thanks a lot. Thank you for joining in, and I look forward to more interesting conversations with you in future.
Thank you very much. I too.
Thank you. Well, that was Ajay Srivastava with his take on the markets and sectors to bet on at the current juncture. But with that, we've come to the end of this edition of Opening Bell. It's a good triple-digit up move on the index. We have, in fact, we did go past that 23,500 mark briefly, but let's hope that we could end round about that level today as well. But with that, we've come to the end. Of course, I'll see you at 3:30 p.m. the market close. Don't forget to tune in. But till then, have a great day, and let's hope the momentum that we are seeing in the market right now continues. Thanks a lot for watching.